Hello traders at CMC Markets. Welcome to a new update by RRG Research for Monday the 5th of February. I'm recording this on Friday the 2nd before the market opens. My name is Julius de Kempenaer and I am presenting to you from Amsterdam in the Netherlands. As I already told you, you'll probably be seeing this on Monday the 5th and I'm recording this on Friday the 2nd before the market opens. Last night, on Thursday, after hours, some very important stocks reported their earnings, causing huge shift in after hours trading, which I cannot see on my charts right now. And before you will see this video, there will be a full day of trading on Friday in between, which makes it kind of hard to come up with some potential trade ideas or analysis of supply and demand levels where, with this after hours trading, it's always a big gamble and wait and see how that translates into the real opening tomorrow morning. But hey, this is what it is. We need to deal with it. So what I'm going to try and do is see if I can keep it high level. We'll talk about some of the world market indices. We'll look at the New York FANG stocks as we try to do. Try to separate out and just stay away from the biggest movers because I really don't know what will happen on Friday. And then see if there is some time left, maybe look at some sectors and stuff. If we start with the rotation of various stock markets around the world, the RRGs are showing us these pictures as you can see them on the screen. The weekly image tells a story where there is a very clear preference for New York FANG, the big tech stocks as you know, the Nasdaq, the Nifty in India, the Dow Jones in the US. They're all moving in a very nice positive heading into the leading quadrant. If we zoom in on the left, so where is that money coming from? It looks it's coming from Germany because you see the DAX is rolling over, it's inside leading, but immediately started to lose relative momentum and rolling over. Japanese Nikkei is showing a really long, nice tail. Here's the CAC, the French CAC index. That's been rolling over. It's not very nice, very short tail. And then here is, this is CAC. You see that weird hook here. And then there is the European Stocks Index, also kind of in its place. Look at the difference in tail length between the CAC and the stocks between, for example, the Nikkei or the Nifty here. FTSE, not too well, and the one that's really standing out from a negative perspective remains the Hang Seng Index. It's really a very weak market in the bigger scheme of things. Now, if I bring that to a daily RRG, which we have on the right here, you will see that there are some conflicting rotations, some tails that are moving in opposite directions. The Hang Seng has picked up, but look at it. This is still the lowest reading on the RS ratio scale, which continues to make me very careful with picking up the Hong Kong Stock Exchange, Hong Kong stocks, because the major trend, the main trend is still down. If you look at the Nikkei index, which is doing really well on the weekly, it's doing really bad on the daily. It's still a very high reading, but look at the tail length here. This is a very powerful move, pushing the Japanese stocks into the weakening quadrant, and we've got to wait and see how that pans out. Same goes for all these markets that are doing really well on the weekly. They went through some sort of a setback over the last 5-6 days. And again, I'm expecting that tomorrow with Meta up big time, Amazon up big time, the US markets are very likely, and it's a wild guess, but are starting to do very well again. And that will very likely cause these weekly tails to respond to that. So just focusing on the longer term picture, because that is more secure. Daily tails will be impacted by daily moves, that's less so on the weekly. I think that the US markets are still in good shape, so is the New York FANG, and so is the Nifty index. Where would you find some offsets, some hedges? Very likely in Europe, in the DAX or in the stocks index, and very likely also in the Hong Kong index, the Hang Seng index in Hong Kong. So that's the bigger picture for world stock markets. If we bring all of that to the 0% return benchmark, which turns the RRG into a price-based price trend analysis tool, then you can see how pretty much all these markets are moving into that top right direction at a strong RRG heading. That means that they're all in uptrends, full stop. And the Hang Seng index has picked up. It's still in a downtrend because it's on the left-hand side of the graph, but it's picking up some momentum. Whereas the Nikkei index is on a price level starting to lose momentum. Quick look at some of the major markets. So here's the S&P 500. We still have that breakout that's holding up well above the 4,800 level. We got that, strong down move on Wednesday and then the uptick again on Thursday. So we've got to wait and see how that plays out on Friday and whether we can still hold above this support level. I think that's the most important line in the sand for the American market, for the S&P 500. If we can stay above 4,800, I think that the current uptrend is still in play and we can expect higher prices. As soon as that starts to come under pressure, that'll become more difficult and we may see a bit more of a corrective move in the S&P 500. And I'm purposely saying corrective move because I do believe that the uptrend, as we've seen it, is still in play. It's getting overstretched, that's for sure. But for the time being, this trend is still moving higher. The same thing goes for the Nasdaq index. We may have seen a small toppish formation here. So again, just like the S&P 500, I think that as long as the Nasdaq remains above, say, 17,000, we're still in good shape. If we go to the European market, then we have the breakout here. But as you can see, if we go further back, it is not at all-time high levels like the US markets. It's still not far, but still below its all-time high levels, which means that there is some overhead resistance waiting when the stocks goes up. From a price perspective, here also around 480 is an important level. If you look at it from a relative perspective, and this is a daily chart, so that is not this is like a short-term uptick. If you look at it from a relative perspective on the weekly, you can see how the DAX index is not keeping up with the power of the moves in the US. And from that perspective, from that time perspective, probably better avoid it for the time being. We go to the New York FANGs, pretty much in line with what we see in the Nasdaq index. Just quickly, the Hang Seng, because that is really probably the weakest market out there, and you can see how this downtrend is continuously evolving. We had a little uptick here. Former bottoms, former support levels are working as resistance, and the next level down, that's going to be pretty important because you can see that that is a support level that was created back in October of 2022, and we're getting back to that area right now. The Hang Seng index should really hold above this level, otherwise the weakness will very likely accelerate to much lower levels. So that's something to really keep an eye on. When we move to the New York FANG stocks, and as I said, that is probably the most dangerous area to analyze right now because there is a full day of trading between my video and when you see it, and a lot of after hours action. So let's try to see if we can make some sense out of these rotations, out of these tails, without going overboard. This is the weekly RRG, and what you see here, there's a couple of important moves. I think that the move of this is the move of Apple, moving from improving back into lagging. That's an important one. And here, Alphabet is starting to move further to the left, not picking up. Tesla remains one of the weaker stocks in that section, in that New York FANG index. On the other hand, we have Amazon moving with a tail here. That I would stay away from for now because it's trading, I think, around 170, like 15 points higher after hours. So you really, unless you want to chase something, but I really don't like to do that because you really don't know what's going to happen. So I'm going to leave that alone. But Microsoft, for example, is on the right hand side. They've already reported. The first price action is already inside this tail, and it's still moving to that lower left hand lagging quadrant. And when I bring in the daily tail for Microsoft, it's getting in line with that. And so is the one for Google, and so is the one for Apple. So there is something that is tradable. Apple, from a negative point of view, because you see the rotation in the weekly moving into lagging, it's confirmed on the daily. So Apple is really one of the weaker stocks inside the New York FANG, and that's something that we got to keep in the back of our mind as being some sort of a threat above the market, if you wish. And then there is Microsoft that is moving in that negative direction and is doing the same on that daily chart. So Microsoft, also a pretty important stock, starting to show some relative weakness versus the New York FANG index. Now, Meta is a different story. You can see how Meta on the weekly chart has already started to move back up, and on the daily we're still inside the weakening quadrant, but the after hours data from Meta is pretty strong. So if that picks up and we get that follow through on Friday, we may see Meta turning back up and coming back into sync with its weekly tail. So Meta is on the right side of the equation, and so are Nvidia and Netflix, to be honest. Look at the height of an AMD and Nvidia. They're way to the right, so there's plenty of room for them to curl back up. So if we go for some of the individual charts, I think we need to focus on Apple, Google, Microsoft as potentially weaker stocks, and primarily Meta as one of the stocks that is a potential offset on the positive side. Start with the the big boy, Apple. You can see how it has not been able to move above this overhead resistance level, and the longer it doesn't break it, the heavier it will get to break it at the end of the day. I would like to see this hold above 180, but given the fact that there is price pressure, if we see that break below 180, there is room for a move towards the next level, which is inside the 170 area. If you look at Microsoft, you can see how there is a big reversal day on Wednesday, and then today's price action is not really getting back to those levels. So that reversal seems to be getting in play, and you can see how those RRG lines are rolling over, making it it looks like there is some sort of an exhaustion going on, and Apple may need some more pullback corrective move before it can continue its longer term uptrend. So Microsoft I'd be very careful with. If we go to Meta, then as I said, they had good earnings. The short-term relative strength is rolling over, but the trend is still holding up really, really well. And if that continues, then there is no danger in Meta. It's actually rotating back up. That daily tail will eventually curl back up and go back to the leading quadrant. So inside that New York FANG universe, Meta is one of the better stocks. And then we have Google, which is again one of the weaker ones, and you can see that big gap that was hit on Wednesday. Tuesday. So here's Wednesday. This is Thursday, and it's going to be very difficult for Google for Alphabet to bring that back up. Maybe there is a close of the gap, but it will be a reactive move, and that makes Alphabet a dangerous play inside the New York FANG. So all in all, from a price perspective, from a relative perspective, all those stocks are still pretty good. But if we zoom in inside that New York FANG universe, there is some kind of dangers for a few of those stocks like Apple, Microsoft, and Google primarily are the ones that I'd be very careful with. So maybe not trade it from the long side. Wrap it up with a quick look at what's happening with Forex. Here is the weekly RRG, and you see a similar rotation for pretty much all of these currencies. The US dollar is the center of the RRG, and what this means is that with these tails rolling over, it means that the US dollar longer term is picking up strength, because these currencies are all starting to weaken. They outperformed the US dollar, so they were in an uptrend versus the US dollar, but they now start to roll over. So the longer term trends are starting to show US dollar strength. If you bring that to the daily version of the RRG, you will see quite the opposite. Here you see that all the currencies are picking up again. So the way I interpret this is that we are seeing longer term US dollar strength and shorter term US dollar weakness. And if you look at that on the euro dollar chart, you see exactly what I mean. Here is the turnaround of that trend. We broke out of that channel. We started to move lower. That's the longer term, starting to see strength for the US dollar, because if euro dollar goes down, it means US dollar strength, euro weakness. But the last bit of information here, you can see a very strong day today, bringing euro dollar back to 108.70. Potentially some sort of a small positive divergence here. So the near term is actually starting to show some positive signs. We could get a little bit of a hiccup here, and as long as we stay trading below this former support line, which is expected to start acting as resistance, that situation remains intact. The longer term US dollar strength, or longer term market moving to US dollar strength, because that's what it is, with a short intermezzo of short-term US dollar weakness when this is going up. I'm going to leave it at this. It wraps up this update by RRG Research for this week. Next week we will be back with some more updates by RRG Research, and hopefully markets will have crystallized what's happening with all these earnings announcements and all the digestion that's going on in the market, and hopefully we'll have a bit more clarity and clearer trends to share with you. Thank you for watching, and I'm looking forward to seeing you again next week at a new update by RRG Research. Same time, same place.